Alright guys, I thought it about time that I put out a video on YouTube because we've released daily videos inside the platform, and I wanted to share this video with you because it's just a live room session. We went through some of the pairs in the live room, and I want to show you the process that we went through to identify 4 trend continuation trades. So we had 4 markets setting up, very similar situations. There was 4 trades setting up, and I only managed to get involved in one, not because I missed the others, but because only one had the entry criteria met. So I want to share it with you because I want to show the importance of having rules that are going to keep you on the higher probability side of the market, so that you don't end up giving back profits to the market with those lower quality trades. So sit back, take some notes. We're going to go through 3 to 4 pairs, and then I'm going to show you the yen pair that I got involved with, which ended up generating 93 pips out of the trade, and you're going to see the whole process. So enjoy. We're going to start here, right? So you guys know that we were looking at the pound dollar. We was looking at this violation of this this trend line here since we put in this higher low. Okay, we had equal lows here, but we put in this higher low, and we've been respecting this trend line each time it's tested until we broke through. Okay, we broke through this level, and then we started to see this bearish run, and we've been pushing down ever since. So as we dropped down to the 4-hour, we were seeing lower lows, lower lows, lower lows. We stopped looking for trend continuation trades when we started to consolidate here. But then last week, we then broke through this major support level, which was this consolidation in here. And we put in a new low. We pushed up. Support become resistance, which we identified last week. We then put in a new low. And then we put in an outside return. Previous support becomes resistance. And then we put in a new low. Okay, and we've continued down. So we've identified a bearish move. We're predicting where market's likely to go next. Now, one of the things that I want to pay attention to is the level in here that we're at. Okay, now this, we could see a hold here, depending on whether or not we break and close below. But this level is respected. This 3300 level is a major level of structure in this market. But if we break and close below, the next level of support really is down here in this VS1 level. So this 31, just above the VS1 level at 3100, purely because that's another level that's respected. So we're looking at 3100 being the next level of major support. So if we break and close below this low, right, there's a high probability that we're likely to push down and test this level next. Now, or continue down. So, identified, bearish, predict where we're likely to go next, down here, right? I'm going to move this up to be conservative. So there's plenty of room for potential profit. So the next thing is decide how we can get involved. Well, I'm dropping down to my trading time frames, and I can see that we've already had a break and close below. So if we've had a lower low, lower close here, this candle here, right, you see this? Outside return, lower low, lower close, outside return, lower low, lower close, right? So what's likely to happen next? We're likely to see a push down. We've got plenty of room for profit here. Look at this. Let's just draw this in. If we get a pullback, there's nearly a 200 pip move down to this next level of structure, support. So as we drop down to the 60, I know that I'm looking to short. I've got a bias, I've got a bearish bias like I have on most of these markets today. Now I just need to decide how I can get involved. So what I'm initially looking for is a pullback up into this kill zone. Now I can't just enter as soon as we hit the kill zone. I don't want to be aggressive because I want to get the best risk reward with the minimal risk. Okay, so the first thing I'm going to do is identify what the current ATR is. And it's around 15 pips at the moment on the 60-minute time frame. So we're going to be up at 56, okay, plus front running. And then what we're going to do is we're going to work out where we get a 1-to-1 if we're shooting for a retest of the lows before taking off our initial targets. So we adjust our kill zone. Obviously this move hasn't finished yet, guys, so we need to keep adjusting this. But for now, if we were to reverse right now at market, this would be where we'd be looking to get involved. No lower than 33.07, because that's the area that we get the minimum 1-to-1 risk reward. Does that make sense? And then we're looking for a lower low, lower close candle in this zone, and that is it. Simple as that. If we do happen to spike above this high but don't close above it, then I have to look for a retest on a lower time frame. And then there's the last way that we could potentially get involved, by means of a pattern trade. So plenty of ways to get involved in this. Okay, so this is the daily time frame on the euro dollar. Very, very similar situation. You guys saw that I put out a video on a bird's eye view of the euro dollar when we, similarly to the pound dollar, was respecting this trend line. We broke down. We started to put in lower lows. I got involved in a head and shoulders around this level here. Got stopped out here. We've continued down further. And as we've continued down, you can see that we're putting in new lows, new lows, new lows, new lows, new lows. Okay. Now, one thing you want to bear in mind, so there's going to be an opportunity for both types of traders here, whether you're trend continuation or counter trend. We've got this VS1 level, this grey box here that's been drawn on for us, which is the next major level of structure. You can see it was resistance. We then pushed down, it became support, and we are approaching that level again right now. And as we approach that level, although as a trend continuation trader I'm looking for that final push down if we get a pullback, there is a counter trend opportunity at this level as well. So let's first of all look at the trend continuation move. So essentially what we're looking at is we've just put in this new structure low. I'm going to drop down to the 60 so you can see it really clearly. Let's just remove these drawing tools off. And you're going to see that we had our new low, right? Followed by outside return. We had that lower low, lower close candle here. I know some of you caught that. Then we had a new low. Then we had an outside return. And now we've got our new low, which just so happens to be right at that previous structure level, that structure support level. And RSI has gone oversold here as well, which indicates that we might see a little relief here as well. Okay, so looking at this at the moment as a trend continuation, what we're initially looking for is a pullback up into previous structure support, should become resistance, and we want to drill down our kill zone. So I'm using a most recent ATR. This is the 60-minute time frame, so we're going to say 20 pips above this high, which is going to put us up at 59. Okay, we're then going to have our minimum 1-to-1 risk reward wherever this move finishes. We're going to adjust our kill zone so that we know where we're getting in, or the lowest place we can enter to get that 1-to-1. And then it's just a case of waiting for price action to push up into this zone before we start looking for our lower low, lower close candle entry. So very, very calm. We're ahead of the game. We know we need a pullback. We wait for a pullback. If we get a pullback, then we look for RSI to go overbought. If RSI goes overbought, then we look for a lower low, lower close candle in this zone. If we get a lower low, lower close candle, then we enter next bar market and we shoot for a retest of the lows. Now, do you guys think that I'll be taking multiple targets on this one, or do you think I'll take my entire position off at this low? One target, entire, one target. Exactly. Why would I be taking one target in this instance as opposed to the pound dollar? Because we're at a major structure support level, yeah. So I want to be safe. I want to get my targets off, my profits out the market, and just wait to see what happens. With the pound dollar, we've got room to move. We've got further room downward to move. So there's a bit more room for potential profits. On this one, we're at that major structure support level. So I want to go 1 in, 1 out on this. Again, I've got to wait for the pullback. Now the other opportunity here is the counter trend. So if you're a counter trend trader, you can see that we're already at that previous structure support level where people will have buy orders set. Okay. This is where you might be building out that fib confluence, building out those filters, that CTS score. RSI has just gone oversold here. You've also got a 127 extension down here. You don't quite have a equal measured move. We're a bit too short for an equal measured move. But this is essentially where you'd be looking for that CTS entry. Maybe you'll wait for a double bottom down here, some bullish RSI divergence, and then you look to enter. Now for target taking, obviously it's the same, right? We're looking at structure. So your targets, based on many of the CTS traders that I know in the room, will probably be at this level here. Okay. Again, I would be 1 in, 1 out only. I'd be 1 in, 1 out only. So I'd be looking for targets at 1630s for targets. So a couple of opportunities there, depending on what type of trader you are. There's not really a lot we can do at the moment, is there? So very, very similar to the pound dollar, very, very similar to the euro dollar. We're seeing some major bearish momentum in these markets this morning. So let's get on to the pound yen, where we got this wedge breakout pattern earlier, but since then we've continued down. So there may be another reason to enter. Okay, it's been very good for breakouts. We've had this little wedge breakout pattern here, which broke to the downside. We had another little flag pattern in here as well, which I'll show you in just a sec. But essentially we're pushing down just like the other pairs. We put in a new structure low, and what we're going to be looking at is a pullback. Now the problem is with most of these markets, it's just a bit of a waiting game. We're just having to wait for price to pull back before we can start to look to getting involved. But there may be, here's the flag pattern from earlier, guys, which I put into the chat just before it played out, broke out. There may be a little structure level down here on a lower time frame, but if there isn't, then we're just waiting. Yeah, so we've just got to wait for a pullback. If we get a pullback, we can start looking at structure levels, right? And then start building out where we're getting in. Same as the other pairs, very, very similar. Yeah, so not too much at the moment. There's not anything on the lower time frame. Alright guys, just wanted to do a quick update because I really wanted to show you that, you know, the importance of... Alright guys, I just wanted to do a quick update because I wanted to show you the importance of waiting for the higher probability trades to play out. Because if you watched earlier, you'll see that I was looking at 4 different trend continuation trades, and only 1 out of the 4 met the entry criteria to allow me to enter the trade. So I was looking at 1 on the pound dollar, 1 on the euro dollar, 1 on the euro yen, and 1 on the pound yen. And I only got the entry criteria met for the pound yen. And by waiting for, this is why we have rules, because by waiting for your entry criteria to be met, it's something tangible that says if you wait for these rules to be met, you'll be on the higher probability side of the market and you won't give back profits to the market on those lower probability trades, those lower quality trades. So I didn't worry about getting involved with all of them. I just wanted to take the trades that met the rules, and this is the only one where the entry criteria was met. And I'm going to walk you through this. This is something called the Greystone Trend Continuation. This is my method that I developed myself, and you can learn this entire method inside the platform. But essentially what we was looking for, if you watched the video earlier, we was looking for a pullback, and the first chance entry would have been this support level right here. And what we're doing is we're looking for that first chance entry at previous structure support become resistance. And the way we get involved is we can, once we've identified this zone, we can then drop down to the 15-minute time frame, the lower time frame, and we're looking for a retest of structure in that level. So we got our double top here, okay? Bottom becomes a double top, and then we roll over. So as soon as we get this double top, what we can do is get stops above the high, an ATR based stop above the high, and then we're placing targets based on the trading time frame, which in this case is the 60. We're a couple of pips above this high because we're front running orders, and you can see here that we've got a very, very decent risk reward pushing down. Hopefully we can hit targets on this. So this is the first chance entry, dropping down to the lower time frame, getting the double top. It's a pound pair, so I don't need RSI to be overbought. We did get some bearish divergence there, not too much, but I'm a bit more aggressive on the pound pairs with the RSI. So there we have it. Out of all the 4 pairs, we're looking at one trade, and that is what's going to allow me to generate consistent profits over time, not giving back my profits to those lower quality trades. So we'll keep an eye on this. Hopefully we can roll over and hit targets, and I'll keep you updated. Alright, so I've just come back from eating some dinner. Notice that we've pushed down a little bit further. We're just teasing the order now. So if we hit targets, we stand to make 93 pips, which will be very, very nice. It will be a very profitable trade. Obviously 92 pips we've got, 93 pips. Yen pairs typically have higher ATRs. The pound yen is renowned for the high ATR. This pair is actually called the graveyard, but it looks like we're going to actually hit targets.
Order filled.
There you go. So there you go, guys. On to the next one. Alright, so that's it. I just really wanted to show you the importance of sticking to a plan, having those rules that are going to keep you on the higher probability side of the market. Out of 4 trades, I took 1. The entry criteria was met on this one, ended up being very profitable, so stick to the plan, guys. I'll see you in the live room. Alright, I'm always getting asked, how I do what I do. How do you trade Forex successfully? What do I need? Are there books I need to start with? Is it easy? Do I need a certain amount of time per day, a certain amount of money? And I've decided to just put together a little video series that's going to teach you everything that I have implemented into my own life, how I trade, how I've managed to be successful at it, and everything you need to know in order to go from 0 to successful trader as efficiently as possible. And then you have the information to go and do what you like with it. So I've put together a little video series, and we're literally going to take you through everything. So we're going to start with the figures, the money, because lots of people think, oh yeah, I know, but I need loads of money to start, or it's going to take me ages to sort of be financially free through trading, and it's not true. So I'm going to give you the numbers so that you can actually work out how long it's going to take you to transition, and give you the figures that you can actually go and calculate your own situation, and you're really going to see an insight into how you go through that transition period. And then I'm going to talk you through all of the mindsets, the personality traits that you have to adopt. There's little tweaks that I had to adjust here and there, and then I'm going to show you all of the tools that I use in my own trading. So I'm going to take you through the whole process, everything I've learned, all of the key ingredients into successful trading, and then you'll have everything you need to know. So all you need to do to access video 1 is just put your name and email address in below, and we'll start off by giving you the numbers. See you there.